You look at the amount of gold that China's been accumulating, and we're only supposed to believe and producing that they have 26 or 2,700 metric tons. They have way more than that, and their banks are accumulating it and doing so in a manner that isn't reported to the IMF. Why would anyone tell the IMF exactly how much they have? The central banks say that, and I would argue that they're buying way more than they're telling us and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that.
China officially reported an increase of only 431 metric tons in its gold holdings last year. However, considering gold imports and production, the actual total was 1,775 metric tons. China exports very little gold, leaving 1,300 metric tons unaccounted for. Adding this to the 1,400 metric tons missing from 2022, we get 2,700 metric tons over 2 years. Could 2,700 metric tons of gold, more than half of the world's annual global production, be hidden in communist China? Andy Schectman suggests that China's central bank has underreported the gold it bought. If all the missing gold from the past 2 years can be attributed to the People's Bank of China, it has nearly doubled its stated gold reserves to almost 5,000 metric tons. This trend of discrete gold stockpiling isn't limited to China. Many countries prefer to keep their actual reserves under wraps, avoiding full disclosure to prevent market shocks. Stockbroker and gold scholar Alastair MacLeod suggests that the People's Bank of China likely has as much as 40,000 metric tons hidden in various accounts, not declared as official reserves. This includes both state-owned and privately held gold. These estimates place China's gold reserves far above America's, which boasts the world's largest reported gold reserves at over 8,000 metric tons. India's recent gold purchases underscore a significant trend. In just the first 4 months of this year, India bought 1.5 times more gold than the previous year. Additionally, India has been repatriating substantial amounts of gold from the Bank of England and other international reserves. Andy asserts that central banks' actions, marked by secrecy and substantial gold accumulation, suggest that the actual figures are likely much higher than reported. If the true extent of these purchases were revealed, it could trigger a dramatic surge in gold prices. We will present clips from Andy Schectman's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I think it's you look at the amount of gold that China's been accumulating, and we're only supposed to believe and producing that they have 26 or 2,700 metric tons. They have way more than that, and their banks are accumulating it. And doing so in a manner that isn't reported to the IMF. Why would anyone tell the IMF exactly how much they have? And people have been saying China's been underreporting it forever. And you look at the central banks; they are buying gold hand over fist. But also equally as impressive to me, everyone always said China underreports. China underreports. Alastair MacLeod says, that they have 40,000 metric tons. Or thereabouts, 5 times what we do, and of which the state owns 20 and the people own 19. But I look at like India as an example of what's really happening. They bought 1.5 times the amount of gold in the first 4 months than they did in the entire year last year, but they repatriated 100 metric tons from the Bank of England, which by proxy is the London Bullion Metals Exchange. And all of these countries in Africa, including Saudi Arabia and Egypt, have repatriated their gold from the New York Fed, i.e. the COMEX. So it's not only the accumulation by the most well-informed traders, it's also the repatriation, the removal of counterparty risk. And that's a lot, I think, what Zoltan Pozsar is talking about. That's why it's commodities. We've broken trust. And I think that's the most important thing. When the central banks say we're going to keep buying, sure, I would argue that the numbers that we all are led to believe are way underreported. The IMF says that. The analysts at Bank of Montreal says that. And everyone has said that about China in particular for years, going back as far as I can remember. So I would simply say that there is no reason for gold to have been reclassified tier 1. And when I say gold, silver is part of gold. And as one goes, so too will the other ultimately, for different reasons now. But they're not going, one's not going to the heavens without the other one coming with. But I think when you see the repatriation, it speaks volumes. It's about the loss of trust. This is what it's all about, the loss of trust. And can you put Humpty Dumpty back together? Don't know. The trust is something that I think is very difficult to get back once you break it in any form of life, whether it be relationships or, in this case, the world reserve status or the center of free trade. People look at this country differently now. Maybe the most important way is the risk of having assets in treasuries as savings. Instead, they're looking at commodities, which I think have no counterparty risk, and the relevance of how important they are moving forward. I think Zoltan nailed it. So yeah, it doesn't surprise me the central banks say that, and I would argue that they're buying way more than they're telling us and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that.
De-dollarization refers to the deliberate effort by countries to reduce their dependence on the US dollar in international transactions and reserves. This strategic shift is motivated by multiple factors outlined in the 2023 J.P. Morgan report titled De-dollarization, the End of Dollar Dominance. These include the weakening US economy, the use of sanctions as a geopolitical tool by the US, the rise of alternative economic powerhouses like the BRICS nations, geopolitical tensions, and a shifting global economic landscape. Together, these factors raise significant questions about the future dominance of the dollar. Andy predicts that as the dollar's influence wanes, the prices of gold and silver are poised to rise. Gold prices have surged over the past 2 decades, nearly doubling in value compared to the slow growth of 10-year U.S. Treasury yields. This trend highlights a broader sentiment. Countries are increasingly hesitant to hold U.S. Treasuries due to concerns about inflation, default risks, and even potential asset confiscation. In response, they are exploring safer options, with central banks, like those in China, substantially bolstering their gold reserves, potentially far exceeding officially reported figures. This discrepancy underscores gold's enduring role as a secure asset. Bank of America analysts predict a potential surge in gold prices, estimating they could reach $3,000 per ounce within the next 12 to 18 months. Andy views this forecast as highlighting the resilience and attractiveness of precious metals amid economic uncertainties and evolving global dynamics.
Ultimately, gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever, why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods 3, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? Raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those numbers. But when you realize that, gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever, 18% allocation to central bank holdings, if we believe those numbers, the writing is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Zoltan Pozsar says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us.
If China significantly increases its gold reserves without transparent reporting, it could strategically enhance its economic resilience and influence. This accumulation might hedge against currency fluctuations and economic uncertainties, providing China greater stability in global financial markets. How will China's undisclosed gold stockpiling impact global economics and geopolitics? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.